Hello, traders. Thanks for joining me this morning. It's 8:02 a.m. Chicago time on Tuesday, the 7th of October, 2025. This is episode number 2696. I want to remind you that derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Let's, get right into it. We're going to check out the Convergent Trading pre-market summary sheet this morning. We have just an ever so slight mixed to risk on sentiment, mild risk on. Let me clear my throat here. Sorry. To a mild risk on sentiment this morning. German factory orders are lower than expected. Came in a little bit lighter. UK Halifax house price index lower than expected. Canadian balance of trade lower than expected. Again, the U.S. government still shut down, and the market is very likely to start getting nervous here by the end of the week, is my guess. Democrat and Republican bills to end the U.S. government shutdown failed to secure sufficient votes for passage in the Senate, as expected. Next paychecks for federal workers are due October 10th, with military personnel on October 15th. Fed Schmidt said Fed must maintain inflation credibility, while he noted inflation is too high, and so on and so forth. You can always grab this sheet, a copy of this sheet on Convergent Trading's feed. You can get there through Conv by looking on X or Twitter. The handle is Conv, C-O-N-V, Trading. What's on deck for today? A parade of Fed speakers, 10 a.m., Fed's Bostich, Bowman at 10:05, 10:30, Fed's Moran, and we have U.S. consumer inflation expectations for September at 11, and then Fed's Kashkari at 11:30, Fed's ECB's Nagel at 12, 12:10, Lagarde, and we have the 3-year note auction for $58 billion, and then Fed's Moran again at 4:05 after the cash close. Then we get the API crude oil stock change. And then this evening at 9:45 Eastern, we get Bank of Japan's Governor Ueda. The S&P has got a multi-distribution profile so far. 116,000 contracts traded. The inventory is 45% short. The range is completely in line. You can see the mode of the 252-day range, 252 days trading days per year. You can see the mode is 29 and the range is 28 and a quarter so far. So nothing to speak of this morning, really nothing dramatic. Arval, Alran are pretty much in line with expectations. We're up 12 points on the S&P, 79 on the NASDAQ. That represents about a 1.5 rotations. So nothing really important. The Dow has got pretty decent volume this morning, and range up 88 points. Crude is off 1.13%. Crude is in a triangle pattern currently. Yesterday, it traded inside of the overnight session, did not get its overnight stat. We'll talk about that in a minute. And it's also trading inside of the Monday or Sunday night session where OPEC reported that the increase in production will be lower than expected, which caused crude to gap and run up a little bit. Copper moving a fair bit this morning, and so on and so forth. Let's get down to the nitty-gritty here. Here's your S&P. This is the TPO chart, so you could see, I can hide the bars. I like to see them, but really what you're looking at is the profile. And yesterday you could see that we pushed down in the second bracket and really couldn't squeeze below that 67, 66, and ended up turning around and going all the way to the other side to break the IB high to the upside. So what we did is we opened we opened inside of the prior day's range, pushed all the way down, could not get settlement yesterday either, and then we turned around and pushed back up. So all of that selling that occurred on Friday was taken back yesterday, and we ended up closing where we opened yesterday. Inside day overall, with no excesses except on the bottom, showing that giving us an indication that buyers are in control. And now it just finally broke to the upside. What's going on here? Finally broke to the upside out of this kind of sideways pattern and new all-time high. So we've taken out that 6,800 from 2 days ago from last Friday. And again, every time the market has sold off, this has become an indication that bargain shoppers, even at these prices, are willing to step in and pay up. And that's really important to note. So with us opening where we are now in what is most likely a gap open, I'm expecting this to pull back a little bit into the prior day's range, so it's not so much of a gap, but I'm looking for a base right in that 67.88 with 67.8875 being the settlement price. So what am I looking for today? Really, it might open here, it might push a little bit. In either case, I'm looking for this thing to revert back. New all-time highs, sellers likely to come in, revert back. The base is likely to be right here. Pretty decent support here. I expect at least a test and bounce for risk off. And if it ends up slumping through the prior settle, fine, we have risk off. If not, then we're looking to get risk secured at 6,800 or get some profit secured at 6,800, and then we start to make our way into the 68.11, which is the next price up. That only gives us about 25 points of range or so, which is lower than what we've been getting recently. That's scenario one. Scenario two, open, make an attempt higher. Look for an impulse down. If we get an impulse down, now I'm going to monitor for a weak return, a weak push attempt out of the range, and then looking for the continuation trade back to trade into the gap to settle. Looking for the gap to settle trade. This is a pretty high value trade for me. And then looking for it to squeeze to the next area, which is down at the 67.70, which is where we left the excess yesterday. That's basically giving you the same setup as this day here, a very similar setup as this day here. That's what scenario two is. That's what I'm looking for there in the ES. In crude, I want to show this kind of zoomed out view here of crude, and really crude hasn't accomplished all that much. You have some clear dividing lines in the auction here. These are really zones, over under zones that we have been playing with, and crude finally explodes to the downside. Crude was forming a wedge or a triangle, something like this. I'm not able to draw a straight line. And so what we have in crude is, a triangle that is formed. This is kind of a classic setup, and generally what you have is a short signal to for the break lower, and that's exactly what it did. I mean, I can find images of this kind of pattern on Google, just a bare triangle break. And that's basically what crude is doing. Crude is back into this 68 to 55 zone. This is an important zone for buyers to step in. Otherwise, we're looking for that low to be vulnerable at 60.40. And as I said, on yesterday's session, the next target is 60. The big target down below is 58. Let's take a look at that for a minute. Here's what crude has done. Let's look at the composite. This is what crude has done long term. I mean, it's amazing how myopic we can be as traders, right? So here's a 30-minute full session chart, right? Globex session chart, and it just looks like a whole lot is going on. But then you look at the composite, which is daily, and you can see that these levels that you these levels that are in crude, these zones that really don't seek nothing more than to highlight the balance, imbalance areas, balance and extreme areas of this product. You know, basically they've been formed way back here in they started being formed back here in November through January, November through basically May, November of 2023 to May of 2024. Can you believe that? And we are just basically sitting and ping-ponging around. And this is why I warn in crude that the movement's pretty decent, but overall it's not accomplishing very much. Crude is in this kind of coma, so to speak, in stasis, sitting here between 68 and 60. That's the total range, basically so far. I mean, it's poked up higher earlier in the year, it's poked down lower earlier in the year, but overall, crude is just stuck right in here, and that's basically what I've been focused on. There's some pretty good setups in there. Look at this thing continuing to run. Pretty good setups in there on a daily basis, in my opinion. If you do trade crude, please do so in the MCL contract, which is financially settled, versus the CL contract, which is physically settled. In other words, you better have a big backyard, because every contract will get you 1,000 barrels of crude delivered to your house if you buy them and hold them. So that's where we are in crude. You know, what am I expecting here based on this this movement? We are clearly forming a spike. I did expect a spike to be down here, but now it's spiking all the way back up. This is likely to spill, to reattempt down, consolidate. It's likely to fight the 6140 area for a fair bit before coming right back into prior settle above and resting. We had a balanced overnight session on Sunday. We had a balanced day session yesterday with no break of the overnight high or low, so the overnight stat was steady. We have a balanced overnight session this morning. Point of control, there, there. And overall, we're just holding steady in here, and there's likely to be a magnet back up here. So as soon as we're done with the selling and buyers step in, I'm expecting it back in the 6170 area. Once again, that's the MCV POC in this area around 6180, 6179. That's crude for you. I'll leave you with that. We'll make it a nice and early one for you. Yes, I'm doing every day this week because I'm traveling. I'm down here in Colombia, and so I'm able to do one every day. So I'll do. I did one yesterday, a TraderBite yesterday. I'll do one today. I'm doing one today. I'll do one Wednesday and Thursday, but the normal routine is Monday, Wednesday, Friday. Doing them every day is not tenable at the moment. Good luck, and I will catch you tomorrow. Don't forget to subscribe to the channel and like. It's free. You can go right to the subscribe prompt by going to ft71.com/YouTube, ft71.com/YouTube. Good luck.